Hello nieces, hello nephews, it's your Uncle Charters here, and welcome back to my YouTube channel where we do unbiased technical analysis. So if that sounds good to you, please hit that like button, please hit the subscribe button, and turn on the notification bell. It would mean a lot. Alright, so in my last video I had a bearish warning for us. I talked about on the weekly chart, SPY hasn't had more than one green week in a row since March. Okay, we had a green week last week. The odds are we may have a red week this week. And right now, as of today, SPY starting off on the bearish side. Okay, because we talked about this range from last week at the 385.5 level to the 390 level. Watch for the breakout or the breakdown, and today it broke down. Okay, so we're going to talk more about that. But first, look at the flow sentiment. It's bearish. Surprise, surprise. Filtered for 500K premiums or above. Put flow 80%, calls 20%. Okay, guys, so big money is still overall bearish. We do got CPI this Wednesday. Let's see what happens. Okay, moving on to my Discord where I write all my plans. I'm gonna keep it simple. Bull case scenario, SPY had to be above 385.5. Bear case scenario, SPY had to be below 385.5. Okay, so bull case above 385.5. Bear case below 385.5. Okay, very simple. Look for calls above 385.5. Look for puts below 385.5. And well, looking at the 15-minute chart here, as you know, Uncle Charter's strategy is simple. We look for calls when a resistance clears. We look for puts when a support fails. It opened up with a failure of the 385.5 level right here. We're lucky enough to enter puts. Ride it down to the next level. I had a zone right here of 383.5 to the 384 zone right there, marked by the green trend line. Okay, so if you play it level to level, that means if you enter from one level, you take profits at the next level. And as you can see, it worked out very well. All right, I left the runner, and boom, SPY decided to back test that 385.5 level as a resistance to confirm more downside. And it did, however, didn't show much follow through. It did hit the next level around 384-ish, but spent a lot of time chopping. And here is the false breakout. Okay, we cleared that 385.5 level, and if you didn't know, my runner got stopped out at this point. Okay, this is why it's so important to play level to level. But you can see here, this is where I got stopped out. SPY busted out of that 385.5 level. I didn't get a chance to catch it. Why? Because I had a cut loss on my runner. Took time of me trying to enter this, so I missed it. Didn't want to catch FOMO, very hard to do, but lucky enough for me, the SPY ended up failing. The support of 385.5 ended up failing on the back test as a support. You can see here this candle, it closed below 385.5. This candle back tested as a resistance to confirm more downside, but here's where it get tricky. This candle right here recaptured it. Okay, a lot of noise today for the SPY, even on the 15-minute chart. Okay, that's what happens with these small time frames. All right, but here's where it got cool. Lost that 385.5 level. Okay, now I did take a trade. I didn't take a trade off that 385.5 level though. However, in intraday, I had this little trend line that I shared with my Discord members, and I had it like this earlier. Yep. Okay, so I saw the breakdown of the 385 level because it was a zone, and it also break down from this trend line. This white trend line, also the false breakout. Okay, so I had multiple reasons to enter puts, and that's where I entered puts. Played it down to the next level, had a wabam moment, 383.5 target, boom, and it just bounced. But overall, SPY just pretty much chopped in base within this range, tricking out both the bulls and the bears. Okay, especially those who were playing the market biasly. Okay, moving on to the daily chart. Okay, you can see I got my fib levels like I always talk about, from the March 2020 low to the January 2022 high. And you see the 38.2 retracement level is at 380. Now that we lost that 385.5 level. Because remember, in my last video, I talked about the range of the 385.5 level to the 390 level. Watch for either the breakout or the breakdown. And today we got the breakdown. So as long as below, I am favoring that we go test that 380 level, which also is around the support of the bear flag. Okay, so if 380 fails, that's not only do we lose the 38.2 retracement level, we also lose the bear flag. All right, so if that breaks down, that is your cue to look for puts. And we could, I think, if 380 is lost, bears would definitely take back control, and we could drop as low as 362, which was the previous low back in mid-June. Okay, and if that fails, here comes the lower low. All right. But if we do test 380 and it holds and it clears a resistance level, there's a chance, especially if it recaptures 385.5 level, it's a chance it could go and fill out more of this bear flag here, or this rising channel, whatever you want to call it. Okay, so to keep it quite simple, as long as below 385.5, I am bearish, and I do favor we go test 380. And if 380 fails, not only is that a breakdown of the bear flag, that is a breakdown of the 38.2 retracement level based on the fib levels. Okay, very bearish. If the price action is bearish, look for puts. All right. VIX, talked about in my last video how it had a big breakdown, almost got a nice recapture. Okay, the breakdown level to be bearish is below 26.17 to be exact. So we're looking here, it closed at 26.16, 1 cent just below it. It's not too bad. So VIX really needs to stay, if it's to be bullish, it needs to stay above 26.3 tomorrow, and definitely clear this resistance level at 27.59. As of right now, the price actions is still looking overall bearish. Okay, so for me to be bullish, it just simply need to recapture a resistance level starting with 27.59. Below 26, that's another breakdown. It could go test 25.45 and break that down. And we broke it down last week, so there's a chance that it might not recapture again this time if it breaks down, okay? Something to keep in mind. Triple Q looking bearish to me, okay? Now, not too bearish because we still technically did break out of this multi-month trend line right here, okay? It's possible that market makers could be trying to trick us out, and Triple Q is just simply back testing the breakout level of this trend line. However, it does look pretty bearish with this double top right here. Double top. And remember, I mentioned in the last video, I mentioned about this 23.6 retracement level at 293.43, okay? We broke down that level. That is a false breakout right here. Double top, false breakout. Okay? Bearish setup. So the next support is at 287. If that is lost, next support is all the way down at 283.5, then 280.5, then 277. Okay, for me to be bullish on Triple Q, it just simply have to recapture 293.43. If that happens, look for calls. All right, Dow Jones, it lost that critical level at 312.3, tested as a resistance, tried to get above it intraday but failed and closed below. Okay, very bearish as of right now. So the next support is around 309.75. If that fails, next support is at 305.5 and 303.6. Only bullish if it can recapture 312.4ish and break out of this multi-month trend line at 316.33. Okay, I got IWM here putting in a lower high compared to this high to this high. That is a lower high. All right, and it lost that 172.3 level. Now that it's lost, I do favor it go back down and test 170. If 170 fails, 165, 162.6, then 159.5 ish back in play. Only bullish if it can recapture 174.35. Play the false breakdown. Okay. And here's Apple. It lost. I have the trend line right here. Well, not a trend line, but a support line here at 145. And Apple closed below it. That is a false breakout setup. False breakout setup with the next support at 143.5. If that level is lost, look for puts, guys. 140.9 is back in play, which is my 23.6 retracement level. All right. Only bullish if 145 is recaptured. Putting 148 back in play. Tesla had a very great trade today with Tesla. It was actually alerted in the group today. This is a very good trade that I'm really proud of. Okay, alerted in the group today. I have first support at 756. If it holds, 782.4 in play. But if it fails, a retest of 739-ish in play, which means if 756 fails, 739 is the target. Look for puts. Breakout level of the triangle pattern. Okay, I was referencing the yellow triangle pattern that we talked about. If it fails, that equals a false breakout. Look for puts. And as you can see here, that's a big drop. Okay, it started off, it opened at 756 and it closed at 703. Over $50 drop, guys. All right, that's a very, very nice trade. $75 a month is definitely worth it, in my opinion. Okay, but I do have resistance here at 707. All right, I have my fib level from late May's low to early June's high. And that's why I have this first resistance at 707. So Tesla need to get back above that and possibly go test 727 with the breakout level of the triangle pattern at 736.5-ish. All right. Keep in mind we are in false breakout mode. Very bearish setup. So if it stays below 707, I got the next support at 700.5, then 686.7, 680. Then 657.85. That's another nice big drop to the downside. Okay, so remember, Uncle Charters' plan is always the same. It's always simple. I identify support and resistance level. When a resistance clears, I look for calls. When the support fails, I look for puts. All right, guys. So I hope you guys found Uncle Charters' video useful. I'm doing my best, and I hope it's good at least. So thank you guys so much for watching. Peace.